The most important decisions in trading don't happen in the markets, guys. They do happen in your head. And what I mean by that is that we're all equipped with the same tools, more or less. If you want to use them or not, this is up to us. But in the end of the day, we all have access to the same information, more or less. And what happens in reality when, for instance, we're taking a trade, we are staying in front of the charts and we are the ones pulling the trigger, is what we're making out of it. In other words, we rely on ourselves, come up to decisions, to make up our mind, to open positions, to close positions. Nobody else can do this instead of us. And no system can achieve positive performance if you're not the one behind ruling it. Okay, and here is the email I've received from my students. This was something that he wrote to me, and based on the day trading system, he's trying to figure out the appropriate place to call a trade a P&L. So I've been talking about P&L trades a lot, and for the people that don't know, a P&L trade is basically when you're running a winning streak, you're not running a P&L trades, meaning that you're not worried if the trade will hit your stop loss, because the way we trade, in most cases, when we're hitting the stop loss, we're already running a break-even trade. So these are a lot of the trades, over 80% of the trades for us, they're risk-free trades. And this means that we are already probably have achieved a very high number for the week in terms of our P&L or the returns we've made, and any other trade is kind of a bonus trade. If you're worried about your P&L, it means that you probably were running a losing streak or a lot of break-even trades and a few losing trades, which means that you should be taking advantage of each opportunity to take profits whenever they appear. Let's say you're going through a losing streak, then you're having a 10x or 15x trade. You should definitely cash this trade in. So what this student is having issue with is trying to figure out where he should actually be calling a trade a P&L trade. And based on his own personal targets, he's a very conservative trader. So he only wants to make 2.5% per week profit, which is a fantastic figure. And he's having this question, which a lot of traders are having actually. So the question is, if he's working to achieve his potential 2.5 per week, he will need to keep an eye on the screens and close in meaningful support and resistance areas to give his account the best chance of obtaining 2.5% a week. So do you agree with me, is his question. And my straight answer is no. So why don't I agree with this person and the question he's asking? So this is something that a lot of traders are asking. The quick question here is to separate strategy execution from account targets. And one thing that's every trader should realize and know is that the edge comes from executing your system the same way every time, not from adjusting it to hit your weekly percentage goals. So profit targets like the 2.5% a week that this trader is having are useful as benchmarks for motivation and something to work towards, but they shouldn't dictate when you exit trades, guys. Otherwise, you're risking cutting winners shorts or over managing or micromanaging your trades every single week, which is basically a recipe for disaster. So one piece still stands out of this email, and this is the fact that he's concentrating on DAX only, which is great because managing too many instruments might get overwhelming. So traders do make this mistake as well. But I strongly believe that starting with one instrument is a great starting point for any system, whatever system you guys are trading. So on the question of this trader, I would say try not to let the weekly 2.5% goal dictate your exits. And I'm sure a lot of you guys are having the same question. Try to not micromanage things in a very short period of time. Your edge comes from following the strategy rules consistently. So take partials when the plan says and let the rest run with timestamps. Timestamps is something that we are using in order to measure our exits. So some weeks you will be under 2.5%. Other weeks you will be well above it. It is the monthly average that counts. It is the quarterly average that counts. So try not to micromanage things. Try not to look too much into the short term. Short term is great just to motivate yourself, to push yourself, and to have some sort of a short-term target. But what matters is the longer-term goals, guys. Closing trades early just to hit the target, risk cutting winners too quickly. And this is exactly the opposite of what we should be doing. Stick to the plan first, review results later, and only adjust if you see a consistent pattern over time. And to sum up, guys, I want to tell you that most traders sabotage themselves and their P&Ls by chasing weekly returns as opposed to concentrating on the longer term time frame. The truth is, consistency in execution, not chasing 2.5% weekly, is what matters over the long term. Remember that, keep this with you, and every time you have any sort of a doubt, try to come back to this sentence. It's not the short-term results that matter, it is the long-term outcome that will build up your P&L consistently.